Welcome to Tea Time. Today we want to talk about U.S. trade deficit and the consequences for other countries, and also the Fed. The Fed is very important central bank in the U.S. that what they do affects the rest of the world. So we have with us Professor of Economics Ori Heffetz. Thank you so much, Ori. And Nitin Bajaj, who is leading our Tea Time committee. So thank you both. Nitin?
Sure. So I have the distinct honor of introducing Professor Ori Heffetz. Professor Heffetz is an associate professor of economics at the Johnson School here at Cornell. His interests lie in the psychological, social, and cultural aspects of economic behavior. Amongst other things, he has studied empirical relationships between spending patterns of U.S. households, the concept of conspicuous consumption, and consumption as a language to convey meaning. He's atypical in the way that his research focuses on micro and behavioral economics, but he teaches macroeconomics here at Cornell. Professor Heffetz got his PhD in economics from Princeton in 2005, where he, interestingly enough, worked as the teaching assistant of Professor Paul Krugman. Paul Krugman, of course, is the 2008 Nobel laureate in economic sciences. Welcome, Professor Heffetz. So I can perhaps start by giving an introduction on the subject, and then we can ask you specific questions. All right. So in July 2018, U.S. government imposed 25% tariffs on $50 billion worth of Chinese exports. In September, the Trump administration announced 10% duty on goods worth $200 billion. Beijing responded in kind at the time, with tariffs ranging from 5 to 10% on $60 billion worth of U.S. exports, eventually increasing to goods worth $110 billion. In early December, however, the two countries announced a truce, agreeing not to further escalate tariffs. President Trump delayed a plan to raise the existing tariffs from 10% to 25%. The two sides have held several rounds of talks since then, with the latest meeting scheduled for Wednesday, May the 8th. On Sunday, President Trump threatened to raise tariffs on all of the goods imported from China. According to the World Trade Organization, from a macro-level view, in the 1990s, global trade grew at twice the rate of worldwide GDP. Since 2012, however, it has been rising only slightly faster than the global GDP. Now, corporate executives are adapting to a world where globalization is no longer the dominant force. In that vein, looking back at the repercussions of the trade war that has played out so far, we see the following two conclusive trends. Number one, U.S. trade deficit has been growing. In March this year, the Commerce Department reported that the U.S. trade deficit in 2018 grew by $68.8 billion, reaching a total of $621 billion. In December, the monthly gap hit a 10-year high. The trade deficit increased with China, Mexico, as well as Canada. Number two, increasingly, American businesses and consumers are paying the cost of these tariffs. A recent study, a joint study by the researchers at the Fed and Columbia University, found that each month the tariffs cost Americans $3 billion in extra taxes and $1.4 billion in lost economic efficiency. Another study by the World Bank chief economist found that the tariffs increased by quite a significant amount, and the aggregate loss to the American economy was $7.8 billion. So perhaps I can start by asking you, Professor Heffetz, why is the trade deficit that the U.S. is seeing increasing day by day?
It's not increasing day by day, it's increasing month by month sometimes. Two things. First of all, I'm not impressed by the figures that often the media likes saying, it's the biggest in 8 years or it's the biggest ever, etc. Because the US economy is also the biggest ever, and it's also the biggest in 10 years. So the question is, as a relative to the US economy, I think that the trade deficit has been growing more or less since 2013, I should say. So we had a big trade deficit here leading to the financial crisis, and then the trade deficit effectively collapsed, just shrank very fast as for a while global trade collapsed. But in the US specifically, imports collapsed, faster than exports, and so the gap between them, the trade deficit, collapsed quickly during the financial crisis. And then it's been growing since, not always, and sometimes shrinking, but overall, this has been a trend way before the current president and way before the administration's trade wars with China, etc. Why is it growing? It's a big issue, but I'll say in general, the U.S. economy has been growing stronger than other rich economies, which is a good thing. And U.S. consumers like to consume also from abroad. And in times when a country grows faster than its trading partners, and at the same time that the U.S. we just got numbers for the first quarter of 2019, which are strong numbers, real GDP growth of 3.2%. At the same time, for example, China has been slowing. So I think China's latest numbers are 6.4, down from double digits not so long ago. So if one country has a strong economy relative to its trading partners, it would import more than the consumers in those trading partners would want to import from that country. So it would import more than it exports, and it would be running trade deficits.
But if I may, other big economies, Europe, China, they balance the budget. So if you look at both huge economies, China being the second one, China today the same size in nominal terms as the economy of the US in 2004, that by the way was growing at 3%, and China is growing 6.5% right now, but that's another discussion. So even if we look at that, China balances the economy, the deficit, and Europe as well. So then in general, the World Bank, IMF, they advise emerging markets to balance the budget. So why the US is the exception?
Yeah,
so you don't seem to be worrying while traditional economists are advising to balance, and Europe, good student, China, good student, they do balance, and the US, no. So nothing happens if the trade is not balanced?
No, I didn't say that nothing happened. I just said that the recent growth, I said two things. I said, first of all, I'm not impressed by the biggest in X years, because everything is the biggest in X years. Things grow.
Yeah.
The second thing I said, the widening of the trade deficit is not a recent thing as a result of the current administration. It's been going for a while. You are right that the trade deficit in the U.S. is chronic. I think since the 70s, the U.S. has had, if you look at 100 years before, the U.S. trade deficit was more or less balanced, sometimes surplus, sometimes deficit. You see World War I and World War II, big surpluses as the U.S. sent to Europe stuff when Europe was under wars. But since the 70s, we have had a trade deficit here, more or less growing, not always. Again, it collapsed in 2008 and resumed growth after that. And in the long run, of course, that's unsustainable. For a country to be running large trade deficits over the long run is like an individual consuming more than they make. And so, the bank may be willing to fund it for a while. In the long run, it's not sustainable, right? You have to... So the U.S. is an interesting case of a country that, as I said, for decades now has been running trade deficits. And for some reason, foreigners have been willing to fund it. You could think of what are the reasons. Some of them are good signs for the U.S. economy. That the country could run trade deficits for so long and still get the capital flows that the U.S. gets. It says something about at least the faith of foreigners in the U.S. economy. And so I'll say as a broad simplification, we could say that U.S. consumers have been, we have been consuming more than we're making. And it has been funded more or less by foreigners who are willing to send their savings abroad to the U.S. and invest it there. For example, because the U.S. never defaulted on its debts. For example, because the dollar never really collapsed. For example, because by and large investments here are, relative to other places, are higher risk, higher return, low risk. Is it sustainable over the long run? No. And at some point, I think foreign investors will start worrying. But so far, they're willing to fund the U.S. You can look at the U.S. government has also been running a budget deficit, a large budget deficit. And still, if you look at the cost of borrowing for the US government,
Yes.
in international comparison, it's not expensive. Why? For some reason, lenders around the world are willing to lend to the US government in spite of the large government deficit at very reasonable rates.
Yeah, mainly Chinese and Japanese, mainly China and Japan, which is interesting because now the trade war is with China.
If I can just follow up on the federal budget deficit point, as you said, it's been growing thanks mostly to the Republican Tax Act of 2017. So as we know, the federal budget deficit also sometimes leads to high interest rates that can push up the value of the US currency, which might lead to lower competitiveness of the US exports. So perhaps if you could talk about what role the Fed should play in monitoring the interest rates, and if there are any other roles it should play. Or maybe if you could also start by talking about the history of why the Fed was created.
Yes, so that may be a good place to start, because when you ask what I think the Fed should do, that's irrelevant. The Fed, following its statutory mandate from Congress, and so what do I think the Fed should do? The Fed should abide by the law and do what the Federal Reserve Act of 1913 tells it to do. What does it tell it to do? The language is vague. But I think we've been focusing on the dual mandate, so-called. So maintain price stability and full employment in the US economy. There's also a medium-term moderate interest rate, but let's leave that. Okay, so price stability, the current interpretation of the Fed is to maintain inflation at around 2%. And full employment, the current interpretation is get employment to be consistent with the natural, so-called natural rate of unemployment. But what is the natural rate of unemployment? We don't know. The current estimates are between 4% and 5%. We're actually below that, as you know. Unemployment is historically low right now. And so the Fed is really, what's put together, and its role is to try to stabilize these two aspects of the US economy. Now, of course, the US economy is no longer in a vacuum, and it used to be a very closed economy. If you go back 50 years, I think the US exports and imports as a share of GDP were something like 5% each. So that's a very closed economy where 95% of what you make here, you also consume here. And so you can be inward-looking, and that's to a large extent what's been happening. Not quite, not exactly, but Now, if you look today at the US, I think the US imports between 15 and 20% of GDP and exports less, hence the trade deficit. But it's it's still a very close economy relative, but it's much more open. As a share of global GDP, the US is no longer what it used to be. I mean, it's still the world's largest economy. It's still between a fifth or a sixth of global GDP, depends exactly on how you count. But it's, it's shrinking as a percent of global GDP. And so when you look to the world economy, you think, okay, the Fed is still the bank that everybody's looking at, but shouldn't it have maybe a more global role? Should it look more, outwardly and not only inwardly? And I think this is a source of tension and a discussion that we're having, and it's been out there for a while. And whenever the Fed does something or doesn't do something that was expected, and markets react rather rapidly, you always hear blames of the Fed that, why, didn't they think about it, or what are they doing to us, coming from other countries, from emerging markets. What do you think you're doing to us? Look at what you cause in our asset markets, or look at inflationary pressures. And I think the answer is always, we're not doing it to you. We are trying to stabilize the US economy, which I think, and past chairpersons of the Federal Reserve said it, which we think actually us inward-looking and trying to stabilize the US economy is also in your interest, in the global interest. I think having a stable US economy with sound monetary policies in everybody's interest. Although it does cause headaches to some countries sometimes.
Yeah, mainly to countries that have no restrictions in the currency, in the currencies or in the flows. So if you have restrictions like China or to a certain extent India, then the contagion effect is much less. So, but if you want to immediately remove your investments your portfolio investments in the stock markets, then why not come to the most stable currency in the world, that is the dollar? And if you have 2-3% interest rates, fixed, everything is stable, so then why not to move? So that's the advantage for China and for India, that they suffer less in times of crisis because they insulate the portfolio investments and their currencies as well that are not fully traded.
Yeah, and that's a policy decision that they made. So it's not costless, but in the balance of risks, where you think about the advantages and disadvantages of free capital flows versus your ability to insulate external shocks. These two countries made, they chose that solution. Some other countries went with another solution.
Yeah, because if you look today at Argentina, for instance, Argentina is in such a bad shape, and with a country that is with a government that is supposed to be favorable to the markets. So what is happening? One would wonder if that's the right policy, but it's a subject for another discussion.
And also, I'm not an expert of Argentinian politics, but I hear that the days of this government may actually be limited, and we may get back to, the previous president.
Yeah,
but anyway,
when the situation is what it is, you can think that the citizens may want to try something else that is less volatile, what is happening. But this is another discussion, and the elections are not yet decided, so we'll see.
Just want to come back to the issue of currency exchange. So, in the US, domestic politics is always the issue of China devaluing its currency. And we were talking earlier, Professor Lourdes, you said renminbi is actually one of the more stable currencies. Perhaps if you could talk about that, and why do people perceive it to be moving so much?
No, when I read in the press that Chinese government is devaluing the currency, if you look at the data, the renminbi has moved 10 cents in almost 11 years. So it was 683 and it's today 673. And the swings have been very stable. If I look at the currency, another currency, the euro, I'm from Spain and I follow the euro has moved from 90 cents to 145 and now 1.12. So the euro that has become not a very important reserve currency, but 20% of the reserves in the world are in euros, so supposedly more stable, has moved much more. Nothing in the press. So I think if we need to look at the data, and actually Chinese are investing tremendously outside. So guess what? For their own interest, they prefer a little bit stronger currency. So they depend on the exports, but they depend also on what they are buying outside. So then they are interested in keeping the currency more or less stable. So is Chinese government playing with the currency? What is your opinion on this?
So subject? I think this is a big topic. I think for many, many years, so there is a little bit of inertia in the public perception of what China is doing with this currency. I think for many years, it seemed like the Chinese currency was undervalued. And some of the signs were huge trade surpluses and a growing, they set on an increasing pile of dollars, which was acquired through selling yuan and buying dollars. At some point, I think a few years ago, China set on 4 trillion dollar-denominated assets. So for many years, I think it was true. It was clear that the yuan is, or not clear, but it seemed pretty strong evidence that the yuan is undervalued, and it seemed obvious why China would do it. It was export-led growth, etc. I think that it's no longer clear that the Chinese currency is undervalued. Again, you look at the signs. So actually, the balance of payment of China changed dramatically in the last few years. If you look at China's trade surpluses, they are nowhere near where they used to be. In fact, in some months, a trade deficit. So roughly balanced. The yuan was led, I think, in 2005. There was a reform in the management of the currency. It was pegged to the dollars until then, and after then, they changed arrangements several times, and sometimes they announced a change, but it seemed like they were doing something else. But long story short, the Chinese currency did appreciate a lot from 2005 to 2008. Then came the crisis, and they pegged it again, and then they released it again. I agree with you that it's been, if you look now for a long-run trend, you can't find one. And that's another sign, by the way, potential sign. And when you look at as I said, trade surpluses seem pretty balanced now, or much more balanced than in the past. And if you look at what happened to the dollar reserves that they used to sit on, the big chunk they had shrank. And so it's not clear anymore to what extent the Chinese currency is far from the market-determined equilibrium, what markets sometimes call the fair exchange rate. A lot of the talk that we see, I think, in the media and politicians and stuff, some of it is just leftovers from those days when it was true. It's no longer clear that it's true.
And even in that big devaluation, moved from 8 to 6. If you look at the valuations in Brazil that go 100%, or in Argentina for 100%, or even the euro again. So moved from 8 to 6. Is this the big devaluation?
It's a big devaluation. They are bigger, but a move from 8 to 6 is a big devaluation. It's a big devaluation or evaluation, depending on the direction. But the other thing is, China is the second largest world economy. So it gets treatment that is different from Argentina and Brazil. And you probably remember, Nitin wasn't born. But, at some point we were worried about Japan, right?
Yeah.
There were books written like Japan is #1. And there was this fear that it's just around the corner when Japan is going to be bigger than the US economy. Of course, it didn't happen. But then, fast forward 20, 30 years, and you see the same thing. I think number one fears from number two. And so number two gets a special treatment also from politicians and from the media in number one, because that's the risk as they perceive it. Whether or not it's a risk, we can discuss some other time. But I think that's where people look, who's running just behind me, and just behind me is China.
Yeah. No, and number 3, Japan, by the way. Japan is considered like a failure by some, but look at Japan. Japan has tremendous companies, the number 3 country by number of big companies in the world. So Japan is not doing that badly.
Flat growth for decades now.
Yeah, but...
so you're talking about things that they still have from the good old days.
Okay. Yeah, but okay, if we compare again Japan and China, China's population is 1.4, with still 400 million in rural areas that can move to the cities, so still a tremendous potential of growth because of the population, only population. But okay, that's for another subject, another day.
Maybe I can ask one last question. So I can reiterate what you said. So you said trade deficits occur when countries spend more than they produce. So if the American government borrows money from overseas to finance its reading, we should expect American imports to increase. So having said that, what role do you think the tariffs are playing, and to what extent they're affecting the trade deficit in America right now?
So I think the main effect of the tariffs that I can see that is pretty clear is just a lot of uncertainty. There's just a lot of uncertainty, a lot of instability, a lot of announcements that are flying in the air, and threats and, retractions of the threats. So I would say the first and immediate thing that you can see is just there is uncertainty about supply chains, uncertainty about suppliers, uncertainty that businesses have, and uncertainty that it introduces to the global growth forecast. So, nobody quite knows how it will affect China, how serious it is. Will there be an agreement or not? I think that in the longer run, once we have more data and a little bit of time to analyze it, we will also be able to talk about more concrete effects, how much of imports actually were shaved off by what tariffs, etc. There are some ways we discussed, some ways for business partners, US, China, to go around the tariffs. There is some evidence, recent evidence, as you said in the introduction, that US consumers have been bearing some of the costs, which is what the textbook model would say. The government effectively imposes a price on imports. Somebody's going to pay this price. But I think a real assessment of this whole episode we will be able to do after the episode is over. Right now, I can say from day one, just a lot of uncertainty. And a lot of uncertainty takes its toll.
And just a very short question. Shouldn't increasing tariffs produce inflation? We have not seen inflation in the last months. Isn't that a little bit weird from a theoretical point of view?
Definitely increasing tariffs, as I said before, like a tax, means that consumers have to get more money out of their pockets, and prices, the effective price that consumers pay is higher. We haven't seen it partially because I think the weight is a weight. So, consumer price index is a weighted average. And so the weight of the goods on which you imported tariffs from specific countries, after you take into account some substitution that has been happening, and some suppliers that reduce prices maybe to counter the effect of the tariffs, etc., just wasn't large to be seen in the headline figures.
Okay, thank you very much. Very interesting discussion, connecting the dots between the Fed, the US, China, the renminbi, the euro, the dollar, and as you were saying, Professor Heffetz, uncertainty for the moment, quite likely volatility in the markets. So more to be discussed, more to be said as you are saying, in the next months. So thank you very much.
Pleasure.
Nitin, Ori, and looking forward to many more discussions.
Likewise.
Thank you.
Thank you.